So the bank kind of did what everybody basically expected today. They left the overnight rate at 2.75%. And I don't think that's really the point. Amid sticky inflation, trade wars, tariffs, and a real estate market that looks like it's about to crumble, there's really just a ton going on. Today, I'm going to cover not only what this rate hold actually means for you, your mortgage, and the real estate market, but specifically what could happen in the future and why waiting right now could literally cost you thousands of dollars and not the way that you think. So why didn't they actually cut rates yet is the big question. Now, first and foremost, the economy itself was soft, but it wasn't crashing. With GDP at 2.2%, they think that a lot of businesses were trying to front run the tariffs, which basically means they were trying to get ahead of the potential tariffs, which is increasing GDP temporarily, potentially. Headline CPI right now is only 1.7%. So this is kind of weird right now because when you remove out carbon taxes and everything else, it looks like right now with core inflation, which is what the Bank of Canada actually follows, it's hotter than what it could be or should be right now. And otherwise, the trade war continues. I mean, let's be honest, with Trump doubling the tariffs on steel and seeing continued confusion around, do we have a tariff this day? Do we have a tariff that day? It is basically a position right now where the BOC and Tiff Macklem saying there's just too much going on. It's super unstable. And there's a marketplace right now where almost nobody knows what to expect from one day to the next. So with all that uncertainty, unless the data absolutely unequivocally shows things are going down, they're going to hold and wait. And Tiff said the same thing. All right, so this is where it actually hits home for you. What does it mean and what's the bottom line? First of all, the projections. So rates didn't drop today, which means the overnight rate still is 2.75%, with prime, most banks being 4.95%. Now, BMO recently came out and said that they still see rates hitting 2%, which is 75 basis points or 0.75% lower than where we're at today. This is kind of a surprise because if you look across the hall at Scotiabank, they're still suggesting that rates only go down 0.25%. So the question most people are asking is this the floor or are we close to it? Which leads me to the next point. Variable rate borrowers. First and foremost, as we know, no change, no impact to your line of credit. And what this means for you is ultimately we could be close to the bottom or the floor. Now, that doesn't necessarily mean go and run and lock in right at this time, but it does mean that if your expectations for taking a variable rate is that you're going to see the impact of rates going down a further 1% from where we are today, then it's probably not going to happen unless we see some major recessionary signs, which although could happen, they're just not likely. If you have a fixed rate mortgage right now, or you're someone who's thinking about taking one, here's what you need to know. We're still in the mid to low fours in most circumstances. And really what the market suggests is that that's actually kind of lower than what they expected this early and this soon. And depending on which side of the aisle that you stand on, there's a lot that are suggesting that we have hit the bottom when it comes to fixed rates. And it's basically the same or up from here. Now, there's a small subset of the marketplace that thinks fixed rates continue to go down. I think it's unlikely, which is why literally a few days ago, I put out a complete video on if you should take a fixed rate or a variable rate. That link is in the description below, by the way. If you're a business owner, obviously, this might continue to put pressure on your cash flow. You're already feeling a little bit stressed out about the tariff situation, depending on if you're an export business. And if you have a lot of labor, you're probably seeing a lot of pressure from the cost of that labor, still continuing to hold very steady and in some cases actually going up. And a big part of that is because inflation expectations are still high. When surveyed, a lot of Canadians still expected price to go up and a lot of businesses were still expecting price points to go up. All right, lastly, but most importantly, if you're somebody who's renewing or house hunting right now, because you're not locking in today, what you need to know is that this is the second rate hold in a row after doing a series of consecutive rate cuts. And the market dynamic has shifted. A lot of people were mentally checked out when we were seeing rates go down. They were just expecting them to go down and down and down and down. So they were waiting. My question now is, does this hold actually mean that people stop waiting and realize that this is where we are and either make a decision to buy or hold in the marketplace? Either way, there could be upwards pressure on interest rates going forward, and waiting could actually just cost you more money. So in the short term, the BOC right now is taking a very cautious approach. It's literally just a wait and see to what happens with these existing tariffs and really how bad it gets. Midterm, the next BOC rate announcement is in July, just over a month away. So this is a quick one. And the suggestion by a lot of banks already is that it's very likely that things could get worse and they will actually cut rates in July. Long term, there's a lot of uncertainty in the air. The tariffs, as you know, are going to completely dictate and define what actually happens in the marketplace. As mentioned earlier, BMO thinks that we're going to see rate drops as far as 0.5 to 0.75%, whereas others think another quarter is as far as we go. I think we're going to wait and see in July where we stand and how these tariffs are taking an effect on our economy, because by that point, we'll see the impact on GDP as a whole and how BOC wants to react. All right, so here's my honest take on everything that happened today. First and foremost, the rate hold today was completely expected. It was announced basically everywhere, and the percentage of the rate drop was virtually nil for the last month. If you're a homeowner or somebody looking to renew your mortgage, there are some major implications that you need to be considering. First and foremost, if you're somebody buying a house right now, it makes no sense not to get a rate hold in hand. Basically, with the potential of upwards pressure in the marketplace, even if it's a small amount, by waiting, it's costing you money. And not just any rate hold. You got to keep in mind that some of these banks are not actually properly pre-qualifying you, and it's resulting in people not getting a rate hold and missing out on significant amounts of money because they don't actually have the right product for them. So make sure it's fully underwritten. We do that in-house. The second thing is to consider reviewing your entire mortgage strategy. I've talked about it before. We have millions of Canadians coming up for renewal in the next couple of years. And here's the thing. I'm noticing a lot of people are waiting until the last minute, and it is literally costing them thousands of bucks. And no, that's just not me saying it. I'm seeing it daily because it's pushing them past their renewal date, or they're missing something, or they don't qualify, or they're carrying extra debt and coming back a month later, or 3 months later, or 6 months later, and looking to refinance. So make sure that whatever you're doing, whether it's paying down more interest, reducing your loan itself, or just trying to get better terms on your mortgage, that you're doing it as early as possible. And lastly, and this is probably the most important thing, don't wait for the next rate cut to make a decision. The rate cut will or will not happen. It shouldn't actually define the decision that you make in this case. Truth is, everybody's going to wait for the exact same thing to happen. And if you do too, you're just going to wait for them to hop in. I mean, we can argue about whether or not real estate values will continue to go down, but I think you have to question yourself, what is your motivation for getting into the marketplace and or making these changes in the first place? Because if you're buying a house for yourself, the reality is you're probably trying to hold it for 7 to 10 years or a lengthy period of time. And it's more about finding the right house for you in the right location. Listen, if you want more straight talk and real advice as it relates to the mortgages, the world of real estate, and so much more, make sure to hit that subscribe button, hit that like button, and we'll see you on the next one.